Good morning, ladies and gentlemen, and welcome to the Wentworth Resources PLC Annual General Meeting. Throughout this meeting, attendees will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Please just simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and we'll send you an email to notify you when they're ready for your review. I'd also like to remind you that this meeting is being recorded. I'd now like to hand over to Bob McBean, Chairman from Wentworth Resources. Good morning to you, sir.
Good morning. Thanks very much. Good morning, ladies and gentlemen. Welcome to the annual general meeting of Wentworth Resources PLC. I would like to introduce you to the directors present here today. My name is Bob McBean. I'm the non-executive chairman of the board. And just to let you know, this is my last annual general meeting as chairman of Wentworth, but not my last AGM, as I plan to attend future meetings and in my role or wearing my shareholders hat, so it'll be a bit different. I would like to thank all the shareholders for their support over the last 11 years. It's been an uphill struggle at times, but we never lost focus on the value of the Manatee Bay asset. We now have a company to be very, very proud of, and is poised for growth. Today is poised for growth and starting from a very strong financial and organizational position. As founder of Wentworth 11 years ago, this is a very difficult day for me. Stepping down is not my strong suit, to say the least. Anyhow, and I'd like to introduce you now to Catherine Rowe, who is CEO of Wentworth. And due to the impact of the COVID restrictions in place in accordance with the Articles of Association, Catherine is formally acting as chairman of this meeting and holds all the proxy votes cast by shareholders. Tim Bushell is non-executive director and chairman of the Enumeration Committee, and from the end of this meeting, he will be stepping up to the role of non-executive chairman as I step down. John Bentley is senior independent director and chairman of the Nominations Committee, and Ian McLaren is non-executive director and chairman of the Audit Committee. Due to the COVID-19 pandemic and related social distancing restrictions which remain in place in the UK, we're required to limit the number of people who can attend the AGM. Catherine and one other company officer are attending the physical meeting to constitute the quorum, with all voting completed via proxy. Once we have concluded the formal part of the meeting, Catherine will give a short presentation to update shareholders on our current performance, and then we will answer all questions which have been submitted prior to the meeting, and as many questions as which are submitted, we can handle that are submitted during the meeting. I can advise that due notice of the meeting, a copy of which is available on our website, was sent to each member in accordance with the Articles of Association. I propose that we take the notice convening the meeting as having been read. I declare that the quorum is present as required by the Articles of Association. I therefore declare the physical meeting duly convened and constituted. For an ordinary resolution to be passed, a majority of votes cast must be in favor of the resolution. And for a special resolution to be passed, at least 2/3 of the votes cast must be in favor of the resolution. And due to the COVID-19 pandemic, all voting has been completed in advance via proxy votes. And Catherine is appointed as chairman of the meeting and as proxy for all proxy votes. I will read out the proxy votes for each resolution, and the results of voting will be announced through RNS and published on our website as soon as is reasonably practical. Okay, I'll go through the resolutions. Resolution number 1 is proposed as an ordinary resolution to receive the company's financial statements and accounts for the year ended the 31st of December 2020. Lovely year, 2020. Proxy votes were as follows: 70,022,186 in favor, 0 votes against, and 2,830,073 abstained. Therefore, I declare the resolution carried. Resolution number 2 is proposed as an ordinary resolution to pay a final dividend for the year ended 31st of December 2020 of 1p per share. Proxy votes were as follows: 72,642,313 in favor, 0 votes against, and 206,673 abstained. Therefore, I declare the resolution carried. Resolution 3 is proposed as an ordinary resolution to receive the director's remuneration report for the year ended 31st of December 2020. Proxy votes were as follows: 51,516,550 in favor, 21,335,709 against, and no votes abstained. Therefore, I declare the resolution carried. Resolution 4 is proposed as an ordinary resolution to reappoint Tim Bushell as director of the company. Proxy votes were as follows: 62,914,425 in favor, 9,728,161 against, and 209,673 abstained. Therefore, I declare the resolution carried. Resolution 5 is proposed as an ordinary resolution to reappoint KPMG LLP as the company's auditors. Proxy votes were as follows: 70,017,186 in favor, 2,620,400 against, and 214,673 abstained. I declare the resolution carried. Resolution 6 is proposed as an ordinary resolution to authorize the directors to determine the remuneration of the auditors of the company. And proxy votes were as follows: 72,642,586 in favor, 0 votes against, and 209,673 abstained. Therefore, I declare the resolution carried. Resolution 7 is proposed as an ordinary resolution to authorize the directors to allot up to 61,849,713 shares, subject to the preemption rights of the Articles of Association, and a further 61,849,713 shares by way of a preemptive rights issue. Such authority to last until the conclusion of the next annual general meeting. Proxy votes were as follows: 63,531,087 in favor, 9,321,172 against, and no votes abstained. Therefore, I declare the resolution carried. Resolution 8 is proposed as a special resolution to authorize the directors to allot 9,277,456 shares for cash, as if the preemption rights set out in Article 4 of the Articles of Association did not apply to such allotment. Such authority will last until the conclusion of the next annual general meeting. Proxy votes were as follows: 66,763,503 in favor, 6,088,756 against, and no votes abstained. Therefore, I declare the resolution carried. Resolution 9 is proposed as a special resolution to authorize the directors to make market purchase of the company's own shares for up to 18,554,913 shares, and to either cancel those shares or hold them as treasury shares. Such authority to last until the conclusion of the next annual general meeting. Proxy votes were as follows: 66,140,216 in favor, 6,502,370 against, and 209,603 abstained. Therefore, I declare the resolution carried. Resolution 10 is proposed as a special resolution to amend the Articles of Association. Proxy votes were as follows: 68,747,747 in favor, 3,879,470 against, and 225,042 abstained. I declare the resolution carried. This declares the formal business of the meeting. This concludes the formal business of the meeting, and Catherine will now give a short presentation of the company's activities before answering your questions. And thank you very much for your attention, and stay safe.
Thank Thank you, Bob, and good morning, everybody. Thank you, Bob, for taking us through the formal business of today's AGM. Again, we have tried to make this meeting to replicate as much as possible a physical AGM, which we very much hope to be able to do in the coming years once we're through the COVID restrictions. But for those of you that have dialed into our webinar this morning, thank you very much. It's great to have you listen in. As Bob says, I will just give a brief update. Some of you as existing shareholders will be familiar with where we are, but I just wanted to update, particularly given our operational update that we announced this morning. So I'll just take you through this short presentation, and then, as Bob said earlier, we're very happy to address some pre-submitted Q&A, and then obviously some Q&A, some questions that are coming through live this morning. So just to start off, this is myself and Bob presenting today, but we do have our other directors. Oh, Mark, I've lost the presentation. Oh. Sorry, thank you. Presentation's back. We do have our other directors, Tim, John, and Ian, with us today, who will be able to answer any specific questions where relevant. As Bob mentioned at the beginning of the formal business of the AGM, Bob will be retiring today from our Wentworth board after setting up the business 11 years ago, being a founder, a significant shareholder, and really driving the business to the healthy and robust state that we find ourselves in today. This is part of long-term succession planning that we have been discussing for some time. Tim Bushell joined us as Deputy Chairman, and after 2.5 years with us is stepping up to the non-executive chairman role. We are also looking to strengthen our board with the appointment of a new independent non-exec director, which we very much hope to be able to announce shortly. And as we say, we hope that this will bring further diversity to our board, and also with some specific regional and Tanzania or wider East Africa regional experience. I also should mention as well, obviously, that as we say here, John Bentley will be also stepping down by the end of this year. Again, John has been with us for the whole of our Wentworth journey, hugely instrumental. But as part of our refresh of the board, we will also be transitioning with the appointment of a new independent non-executive director. We've been through the AGM resolutions, and all our resolutions have been carried this morning. We will be formally announcing this after the meeting. So just to give you an update on our financial and operational update, we announced this morning that we are increasing our production guidance for 2021. That is due to the strong in-country demand for our gas that we've seen, and the strong production that we've seen to date, averaging 80.3 million cubic feet per day year to date. We had a very strong quarter. We typically have a weaker Q2 due to our seasonality, with the hydropower displacing some demand for our natural gas. But we have also experienced a very strong Q2, and that's enabled us to have good visibility for the rest of the year and feel confident about increasing our guidance range today. We also approved our final dividend, which was one of our resolutions just carried. So we will be paying that $2.6 million final dividend for the year ended 2020. Again, we're really pleased that that's an increase 27% from our 2019 dividend, and pleased to be able to return that capital to shareholders through our progressive and sustainable dividend policy, which we very much plan to continue for the long term. We are fortunate as well that COVID has not disrupted our operations. We also celebrated 4 years of no lost time incidents this year, which was a good milestone for us and our operator. Again, minimal work program allows us to really capitalise on the strength of that financial position, and also ensures that we do have the supply capability through some of the minimal work program to deliver into that increased demand that we've been seeing this year. Sustainability is incredibly important to Wentworth. It's really at the heart of how we do business, and we really wanted to evidence that through our inaugural ESG sustainability report, which was published in April this year. We're already working on goals for 2021, including further ways to further reduce our carbon footprint. We do actually have one of the lowest emissions in the sector, but there's always more we can be doing, and you'll see more of detail around that when we publish our 2021 sustainability report. And really importantly, as I think Bob alluded to as well, this has been a journey to really support Tanzania, to support the economic growth, the industrialization of the country, and to be a long-term partner with the government to try to increase low-cost, reliable source of gas to meet those very much needed energy requirements. So we have stable production and very much line of sight to that sustained and growing gas demand, which has really underpinned the guidance, production guidance increase that we announced this morning. And we have moved that up to 70 to 80 million cubic feet per day. And that's really giving us confidence that industrial demand is picking up, particularly given some of that was impacted slightly by COVID last year. So we're really starting to see that coming back. We also announced this morning our Scope 1 and Scope 2 emissions. We do have one of the lowest in the sector, but as you can see, but we are again looking at ways to reduce that further. So in the round, we are very well positioned. We are able to supply into that increased demand. You can see we've had an all-time high there of 10.65 million cubic feet per day into the field. So that really evidences that those 5 wells are performing incredibly well and allows us to be able to meet that demand very easily without additional capex. We've also had some political changes recently in Tanzania, which we believe have been very positive. There's much more positive dealing with COVID and also the attraction of international investment and foreign direct investment, which for our growth aspirations is really important. So we believe that we have the ability to be a leader in the domestic gas space in Tanzania to support that growth in demand for energy. Just a moment on financial strength. It's important to us that we deliver sustainable returns for shareholders. As Bob said, it's been an 11-year journey. We started this business with stranded gas. We're now into material production since 2015, and we're seeing that grow and stabilize. And that's really what's underpinning the financial strength of our business. As a result of that, we implemented our dividend policy in 2019, and it's designed very much to be a long-term sustainable and progressive dividend policy, which for a single asset non-operated business just underpins really quite how good the quality of our asset really is. So we've as I say, we've approved the dividend today, and that's a total return of full year 2020 of $3.8 million. We have strong revenues, again underpinned by our long-term fixed gas price contracts, so we don't suffer from commodity price volatility, which given when COVID really hit hard in the spring of last year and the sector went through quite a lot of volatility, obviously we were able to maintain very consistent revenues due to those fixed price contracts. We are fiscally disciplined. I hope that comes through and will do more and more over time, evidenced by reduced G&A, reduced complexity of our business post the restructuring. We're a simple, transparent, efficient in cost and time for our business, and we have minimal capex into the field as well. And obviously that fiscal discipline is also evidenced through our dividend policy. We announced our cash position at the end of May this morning, which is $21.5 million. Again, just to give evidence that we are continuing with our strong cash generation, which will underpin that dividend policy. We've obviously repaid our debt, and we're getting frequent on-time payments from our main off-taker TPDC, which is also a very credible position. So we have all the right ingredients. The fundamentals are all there for us to continue growth for that energy demand in Tanzania, particularly as the country and economy moves from that traditional agricultural base to a more industrialized economy. And we believe that we can be a key part of that low-cost, reliable energy solution for the country. We're also in the most operationally and robust position we've ever been in. So this is the time for us to really capitalise on that track record and that position of strength as we look to our growth opportunities. I won't dwell on this slide, but it does just hopefully show you the direction of travel. As Bob said earlier, again, this has been a journey. Actually, the team today has been very much together on that journey for many years, particularly with our core team in Dar es Salaam in Tanzania, who really make all of this happen. And all of these charts hopefully are going in the right direction as we continue to build and strengthen our business. The dividend, again, we've talked about this, but I would just make a note that it's a real differentiator for us in the small cap E&P space. We believe this really stands out from the crowd. We are only one of only 3 AIM listed E&Ps that were committed to paying a dividend for the year of 2020, despite COVID and increasing it. And we are obviously by the smallest of those 3 by a long way. So it's something that we're very proud of. And again, we're only one of 7 listed in the sector. So it is a differentiator for us. So what does 2021 look like for us? Strong. We're confident and looking forward to this year. We've had a very good start, first half, as announced this morning. Strong volumes. We expect those to continue into the second half. That really gave us the confidence to increase our guidance today. We are prudent. We like to maintain guidance that we believe is achievable. So again, the evidence of the first half really does underpin that. We've talked about the minimal work programme, so should there be any further impacts from COVID, we do feel that we're well protected and robust and resilient against that. And we're looking at the right growth opportunities. It's really important for us, considering the effort and a lot of hard work that's gone into reaching this stage, that any growth is accretive and works for all stakeholders, and really will go to adding to our existing asset and not diluting that asset. And there are the right opportunities at the right time, and we believe that we're really now in a position where we're able to execute on those. And ESG is a big priority. Huge amount of work that was undertaken last year that we continue to build on this year, and we will be disclosing more and more in the way that investors are increasingly needing to see. So, just a final word. I put on the right-hand side here where we expect to see some of those drivers of increased demand this year. We're already seeing that increased demand from some of the COVID-19 restrictions being lifted, which I mentioned earlier. We are seeing continued extension of the transmission network to distribute and evacuate that power around the country. It's a real priority for Tanzania that we're able to reach all parts of the country, not just the urban and city areas, but also those rural villages where energy poverty is really at its extreme. So we're connecting new industrial customers. We also are expanding our Mtwara power plant. It's not our power plant, but we supply into that, and it's very close to our gas field. So it's important to us in Mnazi Bay that we support our local community with power at Mtwara. And then in Kinyerezi 1, the expansion and extension of that power station just outside Dar es Salaam is also in the process of being finally constructed and shortly commissioned. So I think that summarises. I'll leave the outlook slide up. I think that summarises, where we are today, some of the measures we're taking to make those board changes and succession planning as discussed, but also looking forward to how to capitalise on the really robust and resilient state of our business. And yeah, I'm very happy now to hand over for some Q&A.
Catherine, thank you very much, and also thank you very much indeed to Bob. Perhaps just while I give investors a few more bits of housekeeping, I could ask Bob, maybe Tim, just to bring up your cameras. That would be great. But ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review investor questions submitted during the meeting, I'd like to remind you that this presentation, along with a copy of the slides and a recording of this presentation, will be accessible via your Investor Meet Company dashboard. I'd also like to remind you that your feedback is important to the company, and immediately after this meeting has ended, you'll be redirected for the opportunity to provide your feedback in order that the company can better understand your views and expectations. Catherine, we did receive 3 pre-submitted questions ahead of today's annual general meeting, and perhaps we could start off the Q&A with those. The first one reads as follows: going forward, what are Wentworth's new opportunities for growth, and what are the protected revenues for the next 3 years?
Thank you, Mark, and thank you for the pre-submitted questions from shareholders. That's much appreciated. We are always looking at growth opportunities. And there is some cost and time devoted to that. We are very focused on Tanzania. That's where our track record is. That's where we're able to leverage relationships with our in-country stakeholders. So we are looking at opportunities predominantly in Tanzania, but we would look at the wider East Africa region if they were appropriate to our strategy. There's such a huge growth opportunity in the region, and Tanzania in particular has ambitions to be the East Africa energy hub. It's got so much resources onshore, but also all of the deep water offshore gas that's been discovered. So there's an awful lot of opportunity for us to really build our business in Tanzania, which is where we're excited about. And with the demographic, the circa 6% of GDP growth every year, growing fast economy, young population, there is going to be a huge increase in the need for energy demand, and we believe we can be there to support it. So the opportunities are in Tanzania predominantly, but we would look outside as well if it made strategic sense. In terms of projected revenues, we typically look to our sell-side equity research analysts to provide guidance on that. We are fairly well covered for a small company. I appreciate that some of our sell-side coverage is just for institutional audience, but we do have Auctus Advisors that provides retail audience research, and you can find that on our website, which gives you more detail about projections and a view.
Thanks, Catherine. Just one thing I want to add about the growth potential as well. Yeah. We're working very closely with the operator in Mnazi Bay. We think that, and with the government to increase our footprint there and get more producible reserves in the area. And it's a process that's going on now, and we're working very closely with M&P to develop a strategy of growth out of Mnazi Bay and optimize that asset, because it is a very good asset. The infrastructure is in place, and it's something that we have good growth potential there from a supply side, and there's other opportunities cropping up throughout that whole Tanzanian area that we're working on now and examining. But we are going to be working closely with M&P to develop our expansion strategy there.
Thank you very much indeed. The next question, it's slightly longer. Let me read it. I found it difficult to vote my shares this year and could not find instructions on the company's website on how to vote my shares. In the past, we received notices by email and post from the company or instructions on the company's website regarding the annual general meeting and how to submit your proxy or how to submit your vote ballot directly. This year, shareholders outside the UK received their notices on the 5th of April that went onto the Wentworth website. Why did you change the process?
Okay, thanks, Mark. Shall I take this, Bob?
Yes, please.
Well, I think firstly, we're clearly very sorry that there's been problems voting shares. That we do everything we can to try to facilitate voting and access for shareholders as easy as possible. From our 2020 AGM, our UK registrar moved to online voting only, and we followed the same format for this year's AGM. So the notice of AGM is available on our website, and obviously that includes all detailed information on how to vote your shares. We don't actually use paper proxy forms anymore, as a high proportion of paper proxy forms are submitted are invalid due to incorrect details contained on the form, which the registrar cannot match back to the registrar, or the form becomes illegible. So that's why, to ensure all the votes are cast, Registered Link use that online system from now on. I think if you do have any problems casting your votes, please contact our registrar, who are Link Services at Link Asset Services, and they can be found. Their details can be found in the notice of AGM, which is available on the website, and we'll keep it there going forward. So hopefully, for that shareholder, if you can take a look at that, and maybe in preparation for next year, it'll be easier, hopefully.
Thank you very much indeed. The final question that we received ahead of today's AGM reads as follows: the new Wentworth website is not very user-friendly compared to the old site. Why did you change this?
Thanks for the question. We wanted to change because we were looking to refresh our corporate brand, and we felt that the website better reflected that purpose, particularly our purpose to empower people with our energy, whilst also delivering returns for shareholders, but also that partnership with Tanzania that we talk about. Essentially, we are a Tanzanian business first and foremost, so we wanted a brand and a website to really reflect that more than we believed it was before. I'm sorry that shareholder doesn't believe it's user friendly. We clearly designed it to be user friendly. So any specific feedback is gratefully received. But I think it really lots of feedback that we've had, particularly in country stakeholders as well, about how it demonstrates our commitment to Tanzania, and just really what positioning what we stand for and what we believe in.
Catherine, thank you very much. So that concludes those pre-submitted questions. If I could, Catherine, ask you to open the Q&A tab, the right-hand corner of your screen, if you just scroll up to the top. If I could ask you to read out the questions, who it's from, where it's appropriate to do so, and then obviously I'll pick up from you at the end.
Okay, thanks a lot, Mark. So Bob and I, we'll share some of these together, if we can. So our first question is from Borja. Thank you. Borja says, first, thanks to Bob for transforming the old Artemis into a dividend-paying Wentworth, and good luck. Two questions. One, what is the status on agreeing reduced inlet pressure to the pipeline? Two, Paul Hinks and his Symbian just reached an agreement with Tanesco outside of arbitration. Do you have any insight into the consequences of the agreement, i.e. will the power plants restart as part of the agreement? Bob, why don't you take that one?
Well, it's an ongoing discussion on the reduction of the pressure going into the pipeline. I don't think, to be honest, I don't think the pipeline operator really understands the significance of that to our deliverability. But we're working constantly on that. At least M&P is. On the question of Symbian and that, to be honest, I don't know really what the current status is, if Symbian is going to start up again or not. It was looking for financing the last I heard. I mean, Borja, you probably know more than I do on that issue since you're closer to Symbian. But yeah, I don't know where they stand on refinancing that and getting that project completed, to be honest.
Yeah, and I guess it doesn't concern us too much, does it, Bob? Because we look at the spare capacity and the new capacity that's coming on at Kinyerezi and the Kinyerezi power plants, and that's really the source of additional incremental demand for our gas in the near term. We would like to see K1 reach capacity. K2 is pretty good. Generally runs at almost full capacity, and obviously we've got the K1 extension. So I think for us, that's really where we focus our attention on.
Yeah, we have to focus our attention too, as I said earlier, to get our supply side up to somewhere over 110 million cubic foot maximum deliverability. We've got to get that up to 130, and we know that. But that's, as I say, it's an ongoing discussion with M&P and the government is how we're going to get there.
Okay, so the next question is from Neil K. Thank you, Neil. As a non-operating joint venture partner, what mechanism can you use to impact emissions? It's a really good question, and it's been a real learning curve for both ourselves and Moral and Prom over the last year, as we've looked to really data mine some of those data that you see in our sustainability report. We started from scratch. We are non-operator, so we rely heavily on Moral and Proms for accessing that data. But I can say that it's been great. It's been a very joint initiative. Moral and Prom have given us worked with us for everything that we've needed to adhere to our SASB framework, which you'll see in our sustainability report. What can we do as a non-operator? We do have our own plans for carbon projects to reduce our carbon footprint and our emissions, and some of those can be with Moral and Prom and some of those can be on our own. So we have a bit of flexibility, but I would say that Moral and Prom are very aligned with us in this strategy. We're all very conscious of needing to address the emissions. As I say, 0.22 kilograms of carbon intensity is probably the lowest I think we see in the sector. That's quite impressively low as it is, but I think we can still work together to reduce that, and we are doing it in partnership with Moral and Prom. Bob, do you have anything else to add to that?
No, nothing, thanks.
Okay, so we'll take the next question then. This is from Mark H. On the one hand, you say that Bob McBean will be retiring, but the annual report states that Bob will remain involved with the group as president and will stay on the payroll for another 2 years. Can you explain what his role will entail and what his formal responsibilities will be? I'll probably take that then, Bob, if it's
yeah, that's more appropriate.
Okay, so thanks, Mark, for your question. Yes, as you know, we talked about board succession this morning. It's important, obviously, that we look at that and we adhere to good governance. But Bob, as a founder shareholder and setting up this business, is a key part of our team. We're a very small, lean team. We rely very heavily on our in-country stakeholder relationships. This is very much a relationship-driven jurisdiction, and really goes to explain why we're successful and we've got a profitable business in Tanzania because of the strength of those relationships. And it's important that Bob remains involved. Those relationships are very much on a personal level with Bob, with myself, with Richard, our country manager. As I say, we're a small team. We work very closely together, and that's really important for us and the right thing for the business, in our view, that we find a role where Bob can stay involved, president of our Tanzania business, and also Bob is more easily able to travel to Tanzania, being based in Dubai. So that's the thinking behind it. We're really pleased that we're able to keep Bob for a bit longer before he does sort of retire. So it's a positive. It's a positive and great position for us to be in as a company. Bob, it's difficult for you to, but you want to stay involved, I would like to think.
Well, yeah, I mean, I want to stay relevant more than involved, or as much as involved. Yeah, relevance is important. So when I'm not relevant anymore, Catherine, just please tell me and I'll step aside. Thanks. Okay,
good deal. Thanks. We've got Tim with us, and this might be a remuneration committee question, Tim. So I might be addressing this one to you. This is from Mark H. It's the same Mark. So sorry, second question from Mark. Thank you. The annual report made it clear that you want to change the LTIP performance conditions away from absolute share price growth to a mix of 50% absolute and 50% relative shareholder return. Awards made in previous years in flight will also be amended. How exactly will this be calculated? And which companies are in the selection of constituent companies of the FTSE AIM All Share Energy Index where you measure yourself against?
Thank you, Catherine. And first of all, before I answer that question, can I also extend my thanks to Bob? It's been a fantastic journey and it's not over yet for Bob. So we're, on behalf of the rest of the board, delighted that Bob can stay on and help us. He's got amazing relationships down in Tanzania, which we can use, and a very sharp business development brain, as you all know. So it's very important that we keep Bob involved, and I'm personally delighted that he's agreed to stay on. So thank you, Bob, for all your contributions to this great company that we're working for. On the question of KPIs and LTIPs, just to again step back a little bit, we fairly routinely go and check that we're not out of line with the market, and we commissioned a study by a specialist industry consultant called Ellison back in January, who looked at Catherine's remuneration package in the whole and compared it with about 20 or so peer group companies of a similar size, obviously in oil and gas, not all as small or as large as Wentworth, some bigger, and they did a very comprehensive report. And out of that came a few things. First of all, that Catherine's remuneration package is very much near the medium. So we were happy that we're not overpaying, we're not underpaying our excellent CEO. So that was pleasing to hear. And out of that work also came the fact that our LTIP policy was a little bit outdated, just having a return based. We wanted to introduce a relative performance measure again against a peer group of companies. We looked at an individual list, but that didn't quite work for us. So we chose this the AIM All Share Energy Index. But again, in there were some other energy companies that didn't really bear any resemblance to Wentworth. So with the help of our Nomad Stiefel, we did a selected list, and that's where we came up with, and I'm sure we can share that list. I think it is shared in the Remcom report. In terms of how the detailed mechanisms, I'm not going to try and explain that on this call. That is all laid out in the remuneration report. So we have a little bit of change of direction, but we think it's all geared at obviously longer term incentives for Catherine and to keep going with the growth story. Thanks, Catherine.
Thank you, Tim. We have a question here from Ingemar, who says, hello, thanks for joining, Ingemar. Today's operational update mentions revised GSA terms with Tenesco. Could you please elaborate? Bob, shall I take this? Or?
Yeah, I mean, they're not really revised. Basically, it's just a take or pay revision. There's no pricing change. The volume's just been fixed. It's really clearing up a very loose GSA and tightening it up. There's no commercial changes affecting us at all. It's mostly structural, and it's mostly on a take or pay basis.
Yeah, absolutely, Bob. And Ingemar, just to add to that, I would say, well, as Bob says, historically we had a very loose GSA. It's the right thing to do to renew that with Tenesco. This is obviously for the direct gas that we sell to Mtwara, so it's relatively small. It's around 2.5 million cubic feet per day. It's so relatively small volumes. It's important for all of us that we have a binding GSA, but I think really critical for us, which as Bob said just there, we haven't changed the price or any key commercial terms. So once that's signed, we do expect the payment of the arrears to start clearing. Borja has a question for you, Tim. Where are you based? I'm based in the UK, in Buckinghamshire to be precise. So thank you, Borja. I think we have another question from Mark around 2020 KPIs. I think, Mark, maybe we might be easier for us to answer that question as a written question, and also direct you, as Tim said earlier, to our remuneration committee report, which we believe it is quite fulsome. We do adopt the QCA as a wider point here. We adopt the QCA as our governance code, but we really try to go above and beyond in terms of best practice. We're not obviously combined code, and for a small business that probably wouldn't be appropriate, and it does need to be fit for purpose. But we really do try to provide as much information and disclosure and to try to be as transparent as possible. So any of remuneration related queries, we're obviously happy to take, but we would say that we think a lot of that disclosure is really contained in a full report in the annual report.
Could I just add though, Catherine, again, just to reiterate that that Ellison report did show that you were right in the middle of the pack, and so there may be a wider debate about AIM companies CEOs being overpaid, but in our view, that report confirmed that you're not ahead, you're not below, you're just exactly where we want. And in terms, and an overview from me in terms of the work effort that Catherine puts in, that obviously Bob and I see day to day is enormous, and so we don't think we think she's fully deserved of her package and any bonus. Again, we're a very, very small team. We don't have a CFO, we don't have a COO, so there's a lot of work gone in the last couple of years to get Wentworth to where we are now, with that extremely strong balance sheet, dividend paid, and Catherine's been a major driver in all that. So she fully deserves what she gets, as far as I'm concerned. Just to add my view on that.
Well, thank you, Tim, for your contributions, and Bob. I don't think we have any more questions.
We've got more dates just came in. The point was the KPIs are not fit for purpose for non-operating company. Well, you may think that, but we are focused on different things. We're not just creating a company just to issue dividends and sit back and do nothing. What Catherine and I have been working on for the last year and a half, more than anything, is growing the business. And that's where we spend our time, and a lot of time and a lot of effort goes into that, as you can well imagine. And doing an M&A deal and examining every deal you can possibly do is a time-consuming, frustrating at times efforts. And so that's where I agree we're not an operating company, but we are always evaluating opportunities constantly.
We're not today, Bob, but we have ambitions. We have ambitions to be. We have certainly the capability to be an operator in the future.
I've been operating all my life, and so it's easy. But it's getting the right opportunity. And I use the theory: 1 and 1 has to equal 3. We've seen lots of stuff where 1 and 1 equals 1.5. We're not looking. We see that constantly, and that's what we spend our time on, unfortunately.
And can I just add there as well? Could I add as well there that we're not a passive non-operating partner.
No.
We work very closely with M&P. For those I know there's a few Norwegians on the call, but as some of you know, I do a lot of work in Norway, where a joint venture partner is not passive. They contribute all the time, and this is the model that we are developing with M&P. We're going to focus this year on having an asset development plan for the Nazi Bay, which is something that we have input into. So do M&P, and it will be jointly agreed. So we don't just sit back and let M&P run the show. So we are pretty active. So maybe a little unfair to treat us as a non-operator. I think we're a pretty active partner to M&P in Tanzania.
And especially on the political side in Tanzania, we are extremely important. And that's you can say that, well, why do we have an office like we do in Tanzania? We have it because we actually contribute. That office is a huge asset in the joint venture, our people. So, yeah. So,
yeah, and that's I would hugely agree with that, and that's why we're so lean here, because actually our main asset is our team in Dar and Tanzania, and we would not be in the position we are today without that team. It's nice for us to sit here and talk about the strength of our business, but so much work goes on with that team, particularly around the government and stakeholder relations, as you say, Bob. And particularly in light of COVID. Bob and I haven't been able to travel. None of us have been able to travel to Tanzania as much as we usually were. So we've had to really rely on the loyalty and the breadth and depth of that DAR team. And that's really been able to show the resilience of the business throughout COVID. I mean, we couldn't do it without them. So that's really important asset to us.
I finally got there 6 weeks ago after not being there since last March, which is I've never gone that long. It's ridiculous, but sad, but true. But now I can get out of here. It's easy for some reason.
And I think the approach that Tanzania has adopted now to COVID is probably easier for travellers and international visitors to get there. So that will also improve.
Mark's got another question in here.
You take it, Bob.
Okay, Mark, I'll answer your question. Lean, why not reduce G&A to an absolute minimum and become purely an investment company? Well, that's not what I'm a large shareholder, and that's what I wouldn't be holding shares in this company if I thought that's all we were. And I can say the same for a lot of our major shareholders. We're in here to grow a business and build a business, not to issue dividends and watch our PSA expire and just produce the reserves and go home. That's not what we're here for. That's not the type of company we are, and that's not the type of company I've invested my money in.
And I think, Bob, I obviously entirely agree. And I think that if you see the quality of this asset, the way this asset has performed, we've only really been producing material volumes from that field for 5 years. That asset deserves reinvestment, even if you don't look beyond Manasseh Bay, which of course we would like to and add an additional asset to our portfolio. But even if you just look at Manasseh Bay, it very much deserves reinvestment. It's a very high quality, world-class asset. And there's so much opportunity. You've got brand new infrastructure with plenty of capacity. You've got growing demand at the other end of the pipeline. You've got a cost recoverable PSA. You've got fixed gas price. There's really nothing not to like, and there's really nothing to prevent further investment in our view. So to just wind this as a investment business, paying out dividends would be a missed opportunity. And as Bob said, that's not why we have our major shareholders. And I think also we are really differentiated, a company our size, having those blue chip institutional investors that we do. It's something we're incredibly proud of. We're close to our major shareholders. We're aligned on strategy. That's really important. It's been a very enhanced relationship with our major shareholders. And as Bob says, that's not what they're looking for.
Catherine, it might be an opportune time for me just to cut in, if I may. Obviously, there were a couple of questions submitted by some attendees that require a bit more response, so we'll provide that to them in a written format after the event. So thank you also to all of those attendees for submitting those questions. Just mindful of time, and I also know that investor feedback is important to the company. Perhaps, Bob, I could just hand back to you just for a few closing remarks to finish today's annual general meeting. And then, as I said, I'll redirect investors for feedback.
Okay, just on closing, I just want to thank everybody, first of all, for participating, and also thank all the shareholders who have supported this company over the last 11 years. It's been, as I say, it's been a difficult ride at times. And, Mark, I appreciate what you're saying and taking on board. We always have. But we have got this company in a wonderful position to grow, and I venture to say there isn't anybody as healthy as us with a healthier balance sheet in the business today. So, as I say, thank you very much. I want to thank all the board of directors. I want to thank Catherine. I want to thank everybody in Tanzania, everybody working for Wentworth for participating in a very, very difficult year. We haven't had a face-to-face meeting in I don't know how long, and it's been very difficult. I would very much like to sit down and have dinner with everybody one night. Thanks very much, guys. And it's just been a wonderful year.
Thank you very much indeed, Bob, Catherine, and the rest of the board from Wentworth Resources. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the board can better understand your views and expectations. This will only take a few minutes to complete, and I'm sure will be greatly valued by the company. On behalf of the board of Wentworth Resources PLC, would like to thank you very much indeed for attending today's annual general meeting. That now concludes today's session, and good morning to you all.